And Sphere Rocket offers fantastic tutorials and things to the VAs, by the way, so they can come up the learning curve. The VA that we selected, we wanted somebody to have, solid admin experience, knows some critical tools like CRMs, our investment portal, lots of those little things. And the great thing is they bring ideas to you too, because there's efficiencies and apps and processes that, you need it done, but I wouldn't know the first thing about how to find that whatever app. And I'm just amazed at what our VA is teaching us about, oh, no. Well, you're doing it this way. We should do it this way. So I like that she's proactive that way. And it's just saved a tremendous amount of time and energy. And we were looking for a bit of a hybrid VA too, someone who can do the admin work, but also can start cultivating leads for us as well. So we're about to launch that phase of it with her, and just, coming up with different avenues to think about how to cultivate leads, whether it's sales navigators. So get her up to speed on LinkedIn, and what is the process for getting up to speed on LinkedIn for her? Really just coming up with some novel ideas of how to generate leads. She'll be doing pre-qualification for us, and she had prior experience she used to work for a realtor. So it's different, because in those days she was calling people if they want to sell their house. But the skill that I care about was someone who's not nervous about making those phone calls, someone who doesn't get dejected by getting 1,000 no's. She can still pick up the phone and still make those calls. And it's just that persistence and not taking things personally that I really like about it.
Okay, hello and good day to everyone. That is for tuning in here at the Sphere Rocket Podcast Network. Once again, I'm going to be the host for today's episode. My name is Dwayne, and right now we have yet another exciting episode, because this time we're going to be joined by someone who also works in real estate, but in a slightly different kind of field of real estate. But I guess more information to be dropped on that. But for now, I'm going to welcome our guest from the managing partner from Midfield Investments, and we got more to know about her. So we got Arlett Tygesen. How are you doing? And welcome to the podcast.
Hi, Dwayne. Nice to meet you. Thank you for having me.
Okay, nice to have you here, and thanks for attending the podcast. So pretty much, I guess, can you make an introduction or background about yourself, other than, of course, the one I just mentioned earlier as the managing partner of Midfield Investments?
Sure. So I have about 17, 18 years experience in the investment space. I came at it from capital markets. I was an analyst on a portfolio. I started out as a limited partner investor at a public pension fund, and then moved over to capital raising ultimately near the tail end of my career. And I raised capital for general partners. So I've worked on both the LP space and the GP space. And we'll get into that a little bit more, I guess, in the subsequent conversation.
Okay. And, as I mentioned earlier in the introduction, now usually we talk to people in the real estate selling to, consumers, regular consumers. But I guess something different about what Arlette does is she does it in a commercial type of property. But Arlette, can you tell us more on how does that differ from the usual real estate that you usually hear about?
Sure. So unlike what a realtor does, where he helps people buy and sell their usually primary or secondary residence, I work with larger real estate assets, multifamily buildings, 50, 100 units. And so therefore we get investors to contribute to basically the purchase price of the asset. So it's one building and multiple investors in a structure called a general partnership, limited partnership, GPLP, where I act as the GP, my partners and I at Midfield, and our investors are called limited partner investors.
Hey, I didn't know that there's that kind of level of investment, because I thought that when someone owns a building, it's just maybe an entire company that owns a building. So these are like separate entities that's, have an investment in like one building, commercial building.
Yeah, absolutely. Lots of different kinds of people can own the buildings. The way we structure it's very common. We are technically the property owner and therefore the landlord in a sense too. But because of the size and scale of the acquisition, we have it funded through passive investors called limited partner investors. And we do that structure, Dwayne, because As a limited partner investor, it actually spells out what it does in the name. Limited partners have limited liability in the deal, in the acquisition, and all the upsides. So when you invest as a limited partner investor in a $5 million building and you invest $100,000, the goal of this type of transaction is to not only return your money back to you with an interest rate that's a favorable interest rate, or return on your capital, but ideally we're all trying to 2x your capital and give you a sizable return. That's always the goal. Obviously it's whatever the market will bear, but we're in a really nice acquisition stage right now in terms of what's available. We particularly like the Texas market, so there's a lot of tremendous opportunities down there to buy some well-priced assets, and we think our investors will enjoy the benefits of those returns, with the aim that they will return what we hope they will return, and we work really hard to make that happen.
I see. I'm just curious though. So if anyone wants to invest in if your commercial properties, do they just is it like the stock market where just pray and hope that the price of it goes up, or they actually need to do some sort of work as well to somehow boost it, their investment? So
that's a really good question. So what we do as general partners, when we're capital raising for a deal, we spend time with our potential investors, teaching them about the space if they don't know much about it. There's a lot of people who have been doing this for a long time. That's my whole background as a limited partner investor, and then raising capital on behalf of GPs. It's a structure that exists more at an institutional level or professional level, let's say, but we spend the time educating our prospective investors in terms of what the benefits and risks are of investing in this kind of structure. We take the burden of all the risk on the GP. The LP does not have any risk. And we do our thorough due diligence. In fact, my team's down in Texas looking at a building right now, and that we have under contract. So we do a lot of homework on it to make sure it's, it says what it is, does what it says. The occupancy rates are there. We do the inspections. It's a real dig-in process. And along the way, we keep our limited partners well informed through regular reporting and regular discussions. So they always know where we are in every step of the way. And typically these investment vehicles last anywhere from 5 to 7 years. So you could technically have all your money back out to you within 5 years or 7 years, or you could choose to stay in the fund and just keep letting your returns accumulate, ideally. But to your point earlier, it's not like a transaction in the stock market. Stock market is mark to market every day. The valuations are established every second of every day, and therefore you're sort of riding the tailwinds or headwinds of the day, right? So with this type of asset or investment, it's a long-term asset. We're married for 5 years, and the great thing about and what we love about the real estate asset class is real estate is one of the only investments or asset classes you can invest in where the underlying property appreciates, tends to appreciate, typically appreciates, and there's a ton of data that shows that real estate is an asset class that appreciates in value over time, over the long run. So it usually turns out to be a terrific investment for people. So unlike the uncertainty of the stock market, this is a place to park your capital for a good long time, and you're earning 10, 15% IRRs and doubling your money. If you're with a trusted advisor, a trusted GP, and they've done their homework and the markets are cooperating, the returns can be more outsized than the stock market, which is more of an exercise in picking the right stock and hoping that you have picked the right stock. Everyone's focusing on Nvidia and whatever today, and I hope we all pick the right stock. And you can watch your portfolio go like this, or you can park it into a longer term, slower growth kind of investment like a real estate fund. And you not only earn cash flow regularly in that investment period, but also the benefit of when we sell the asset, we share those proceeds with the investors, and the investors get the bulk of that return too. So GPs get a 20% or 30% portion of the return. The limited partner investors they get the 70-80%. So for the privilege of having their capital helping us buy these buildings, we give them the bulk of the return.
That's the thing about real estate. It's really hard to lose on real estate unless you really played your cards wrong. But I guess you can see over the years that, let's say 10 years ago, there's a house that you're looking at, like 90 to 95% of the time, it would be higher in value. And I guess that would be more in commercial type of buildings, especially, companies are continuously growing and looking to just, expand and grow. So pretty much the valuation of those will continuously expand. And now I'm kind of curious though. So compared to the usual properties, investing in properties versus investing in commercial buildings, can you tell me the differences? If you can also tell the pros and cons of both, on why should people invest in this? Which type of people should invest in commercial and compared to the ones investing in residential real estate?
Sure. Well, number one of the biggest differences is the scale, right? So we're looking at several millions of dollars versus someone buying a house in Texas. It's maybe 350,000. So and that's a personal investment. That's your primary residence, for instance, or maybe your secondary residence. That's not often an investment for you in terms of how you're trying to create wealth for your future. That's your primary home. That's where you want to live. It will appreciate, as real estate typically does over time. Markets do fluctuate, but it's, statistically, if you look at the history of real estate investing, appraisals have not gone down substantially. They go up, particularly in most markets. And then they also tend to rebound. So what we invest in is multifamily buildings. So 50, 100, 200 units. They're called multifamily because they're rental properties, usually 3 stories or less. And they're in sort of like bedroom communities of thriving urban centers. And we look for a number of really great criteria around why we invest. So it has to be a good job market. The economy has to be strong. It has to be a business-friendly environment. It has to be a tax-friendly environment, and a landlord-friendly environment. And that's why we love Texas, because all of the above applies there. They have 0 corporate tax rate, 0 personal income tax. Employers are moving there in droves right now. When you look at the number of head offices that have moved from, say, California, New Jersey, New York, everyone's moving there. Amazon has a hub there now. Tesla has a gigafactory. Oracle has moved to Texas. And there's multiple energy organizations there, head offices. There's just a net inflow of population there. And people like the climate. There's a lot of great reasons to move to Texas, and it's a reasonably affordable standard of living there too. People make decent money, and it's not tremendously expensive. Unlike where I'm from, Toronto, Canada, which is one of the most expensive places in the world to live. What we can buy for $5 million here is basically a condo, and you're maybe lucky to get a parking spot with that. Versus I can go to Texas and buy a 52 unit for $5 million. So, just the economies of scale are tremendous. The average investor doesn't have access to these commercial deals. So when someone wants to invest some of their capital and try to earn a return, you can try to do it on the stock market. You can try to put it into mutual funds, but you're stock picking and you're basing that selection off of the whims of the market, let's say. Parking your capital for the long term into something like a real estate asset class just makes sense to me for a whole lot of reasons, because it is a safer bet. We are facing the whims of interest rate uncertainty right now, but over the long term, you do see appraisals going up in the right direction. So it's a nice place for people to put a couple $100,000 and reinvest that capital every couple of years as a new deal comes along. And it's called the laddering effect, really. I don't want to get too technical here, but if you place some capital every year, eventually over time, you're going to get cash flows every year. And then you're also on the back end of your portfolio, you're going to see a nice rise in the value of your portfolio as well. So it's a nice place to park some money for sure. And you can do it at larger scale too. So the average person doesn't have access to buying a 50-unit building or a 100-unit building. They're going to buy 1 or 2 houses and maybe flip them, whatever. You'll never build scale or wealth by flipping 1 or 2 houses at a time, the way you can actually really participate in that market, especially if you want to fast track, is to buy at scale. So we provide that opportunity for people to invest at scale that way for, as I said, very minimal risk and not a lot of money too. Like, we're the ones that are putting up a lot of money, and they only have to pay for a little slice of it, right? So think about it. If you're paying $100,000, but you have access to a $5 million asset, that's not an enormous amount of capital for you to have to put up, but you get the benefits of all the returns, the renovation, the refinancing, the reappraisal, and the cash flow. We literally share what these investors get is their share, their portion of the rent that's paid monthly, and the appreciation of the asset when we go to refinance it. We write a check and we give them back the money. Like, there's multiple ways to earn money on these types of investments.
So it's like, let's say I'm an investor and the building, you get like some passive income from the rent. It's not like when you choose to sell your assets, that's the only time you get a return. So you get some sort of payment for every profit, like commercial profit, not just selling the property kind of profit.
Correct. You're absolutely right. So there's cash flow every year from the minute cash flow starts. So for this particular deal we're working on right now, the first check comes out, the cash flow return to investors starts 6 months after we close the deal. So then you'll get, your quarterly distributions. So you'll participate in the cash flow the whole way down. And then when there's a financing event or an exit event, so we either refinance the mortgage based on the new appraisal value, because we're also renovating these places, right? So we'll spend the first year or two putting some capital in. That's why we need to raise capital, put some money in to renovate the space, make it look beautiful. We can increase the rents that way. We can add a few amenities like car parks, dog parks, pools, you name it. Bring the property up to a really specific, excellent standard. And we're able to raise the rents a little bit within what the market will bear, of course. We're not just exorbitantly raising rents, because you'll never get anybody to rent those places otherwise. And then those cash flows in turn get paid back pro rata to the investors. So you get the cash flow, you get the benefit of the bump of the cash flow because we've been able to raise the rents. And then all the while, the asset is appreciating, and we'll get it reappraised. And this particular deal that we've done, it's about $5.5 million. We got it at $1 million discount because it's a motivated seller. And when we do our renovations, we'll see in excess of a $6 million appraisal on that. So we've gone from 5.5 to over 6. We bought it for 4.5. There's already huge equity on the buy, and that's why there's cash flow from day one on this property. So
that sounds really awesome. Actually, I think a lot of our listeners would be interested, just in case they have like 100K or a couple 100K that's just lying down in their bank account wanting to invest it. But what are the actual requirements? Do you just need to have money to be able to invest, or are you looking for specifics in terms of the background of the person, or what does he do for a living and stuff like that?
Right. That's an excellent question. So people don't know about these structures to invest in. It's just not a well-known area for the average person. It's part of my job is to really start getting out there and talking to people about these wonderful opportunities. For our deals and for most GPLP structures, not all, but most, you do have to have certain criteria. So for our particular deal, you have to be what's called an accredited investor. The minimum investment is $50,000 per investor per investment, and it's really a threshold of your income or your net worth that you have to meet in terms of being a qualified investor for that. So there's details around that I can share with you, but it's basically, $300,000 in income or $1 million in net worth, and there's different criteria if you're single or you're married. So, but typically or basically it's accredited investor. And that's, we just get a little form filled out and we get a bank statement to show you have what you have. And then you're allowed in the deal basically. So, and people can use, people will redirect funds out of their mutual funds because they realize they're not making any money in mutual funds. They'll sell that position down and they'll redirect it to something like our real estate fund, because the return profile just looks a lot better. But there's lots of ways to bring that capital. If it's a small business owner, for instance, they'll take their retained earnings and they'll put it in, because what are they going to do with the retained earnings? So if you're an individual, you might have some pension money that you have to allocate somewhere, or it's your savings. You need to start making some more money on it. Because I don't know about you guys in the States, it's a little bit easier for you guys, but in Canada, if you just park your money in a savings account, you're lucky to make 1% or 2% on your money. And that's basically, you're giving the bank your money they're going to go make a whole lot of money off, because they're just going to loan your money out, and they're going to give you, for the privilege of that, they're going to give you 1% or 1.5%. The high yield savings accounts, they don't really exist in Canada. I know you guys have them in the States, and it's a very plausible component to your investment strategy, but I wouldn't put all your money in that kind of thing. I'm not a financial advisor. Let me preface everything by saying, you do need to seek advice from your lawyers and accountants, and make sure you have all your ducks in a row that way. But like I said, the average investor, or an individual, can redeploy cash that they have sitting in a savings account or another investment that's not serving them well. And small business owners, we tend to get those guys investing their retained earnings or excess capital that they have sitting around, that if they don't invest it, then they're facing capital gains taxes and all sorts of things. So it's a very good tax efficient way to invest your capital as well.
Okay, and I'm just wondering, so how long have you been in this business exactly?
Well, between my partners and I, there's 5 of us. Between the 5 of us, we've been at this for a collective 75 years. So we have over 2,000 doors under management, $140 billion in capital under management. We've been at it for a long time. I myself have raised hundreds of millions of dollars in my past life. So we have the ideal team, and I would encourage everyone to look at this when you're doing your due diligence on a partnership like ours. You have to look to see if they have relevant experience. So has anybody been in the real estate business long enough? Does anyone have construction real estate or construction experience? Does anyone have investment experience? So, you need to make sure the team has the right background, which is what our team does. And also, have they provided the returns and basically the returns that they set out to achieve, and what you're promoting and offering? Have they performed on that? So, there's some good criteria to look at, and making sure your money is going in the right direction, and you're parking it with the right people. And it just requires you to do your own homework, but just looking for some key criteria, knowing who the partners are, have they been at it for a while, and sort of put their money where their mouth is, right? So are they doing what they say they're going to do?
Yes, and you've mentioned about your partners, but how about the team that you work with? Because I think this is a huge kind of job. You need to reach out to clients, you need to get leads from the properties that you wanted to invest in. So under you, do you have a specific team that does all of that, or are you like a one-woman show?
No, that's a really good team. Not everyone realizes the infrastructure you have to have behind what we do all day, every day, right? So we have one of our partners is deal origination. He spends all day, every day looking for deals, and you're not finding these deals on the MLS, right? You need to have really great relationships where they're off market opportunities. And if you've proven yourself to be a trusted partner, which we have, we have an enormous amount of deal flow that comes to us from brokers around Texas or Oklahoma or wherever, that they know that we say we do what we say we're going to do. We perform. We don't try to do cutesy things on the deals. Different people do different things, and we just fully believe in showing up with integrity, do what you say you're going to do, and the deal flow comes to you when you are that kind of investor. So, yeah, we do have a team that operates in the background. We have an asset manager, we have a property manager, we have brokers and mortgage brokers and real estate brokers who bring us deals, and we also have great relationships with the mortgage brokers that enable us to see multiple opportunities on how we finance these things as well. So relationship business, all about deep relationships, and that's a critical thing.
Yeah, I guess lots of referrals is needed as well to make sure it's a huge investment. So you can't just go out like a door-to-door salesman or calling out random people about this. So
no. In this business, your reputation and your relationships are everything. everything. So, and we've seen the last couple of years when the market was pretty frothy, people were just buying assets at whatever price from whatever source. And now we're seeing, a little bit of bloodshed in the market. And it's a great buying opportunity for us, but it's also a good lesson for people who are new to the business or new to the industry to just, make sure you do your homework, make sure when you run your numbers, you do your sensitivity analysis on the deals that you're doing, very conservative underwriting, and you're really understanding what those inflection points are where the deal no longer makes sense and how you walk away from it. You have to be unemotional about it, but making sure that you are understanding what those pressure points are on the deal that can make it collapse and not work anymore. And I think there was a little bit of maybe ignorance in the last couple of years about, interest rates are never going to change. My deal is amazing. It doesn't matter what I pay for it. It's just going to be an amazingly returning deal. And we've just seen so many things collapse in the last couple of years, unfortunately. But you see these corrections every few years in real estate. So unfortunately, there's great opportunities for us right now. And if you have cash and you're able to invest, this is a tremendous time because the discounts are unbelievable.
Exactly. And I guess my next question is in regards to, I've heard that you've recently had your own virtual assistant. So what got you into having your very first virtual assistant? And how was it so far?
Well, because we just got so busy, and it was, there's so many admin things that have to happen on the back end, and we were all just doing parts of it, and it was just, you needed somebody to have domain ownership and domain expertise in certain aspects, and the admin is the person who keeps you all aligned and keeps you on a path and executes on things that are absolutely critical in any deal or any operation or any function in a business. And once you get to a certain size, you absolutely need this kind of support. So we just recently started with Sphere Rocket. And so it's early days for us, but the absolute need was there, and I'm glad we've done it. It's been a great experience so far. And Sphere Rocket offers fantastic tutorials and things to the VAs, by the way, so they can come up the learning curve. So the VA that we selected, we wanted somebody to have, solid admin experience, knows some critical tools like CRMs, our investment portal, lots of those little things like Canva, all these things. And the great thing is they bring ideas to you too, because there's efficiencies and apps and processes that, you need it done, but I wouldn't know the first thing about how to like find that whatever app. And I'm just amazed at what our VA is teaching us about, oh, no. Well, you're doing it this way. We should do it this way. So I like that she's proactive that way. And it's just saved a tremendous amount of time and energy. And, we were looking for a bit of a hybrid VA too, someone who can do the admin work, but also can start cultivating leads for us as well. So we're about to launch that phase of it with her. And just, coming up with different avenues to think about how to cultivate leads, whether it's sales navigators. So get her up to speed on LinkedIn, and what is the process for getting up to speed on LinkedIn for her, and really just coming up with some novel ideas of how to generate leads. So she's doing some pre-qualification, or she'll be doing pre-qualification for us. And she had prior experience she used to work for a realtor. So it's different, because in those days she was calling people if they want to sell their house. But the skill that I care about was someone who's not nervous about making those phone calls, someone who doesn't get dejected by getting 1,000 no's. She can still pick up the phone and still make those calls. And, it's just that persistence and not taking things personally that I really like about it.
So I guess a real cold-hearted cold caller who just get through all of the no's. I guess that's something.
Exactly.
And,
you have to have a bit of a thick skin for that. People don't appreciate how that is a challenging role. So, so we'll see. I mean, it's so far so good.
Yes, and I would like to ask, what do you think was the biggest difference that you felt or has an impact in your company since you've had a VA?
Oh, just I'm a list taker, and my lists were getting so long with a lot of this nitty gritty detail that had to be done so that we could execute on the larger strategy. And everyone has to have a role in the company. And we didn't have that position filled yet, but all these not little tasks, very important tasks had to happen. But it wasn't the best use of my time. It's not the best use of my partner's time. We really needed to find somebody who could really fill in all those blanks for us. So it was an important aspect to fill pretty quickly. So we kind of got on that pretty quickly. And I can see how we're going to need a couple more VAs in the next little while so that they can be very specialized. Because I think there's a lot of value in specialized VAs as well. So.
I guess that's also a common misconception that I've been hearing from other people as well, that knowing that, okay, a VA is just someone who can respond to emails and maybe just fix your database or sheets and, those kind of stuff, but they can be specialized based on what kind of VA you wanted and how you wanted it to be trained. I guess in your part, you're wanting to, you already have one that does cold calls and also some, a bit of some technical stuff at the CRMs and, those kind of stuff, and you wanted to hire more people that are more specialized. So VAs are not limited to just taking phone calls, answering questions. They can be molded into whatever you want. And I guess that's something.
Yeah, absolutely. And with every new employee, there's that learning curve, and it's a bit painful where you're trying to download your brain, and I just need you to know how to do this, and it's just patience is the order of the day. They eventually get there, and you'll look back and go, oh, that was way easier than I thought it was going to be. But the next move I would make there is to really focus like a service VA to do all the admin stuff, the follow-up stuff, and then a sales-oriented VA who really can get out there and start really generating those leads for us and cultivating those multiple opportunity sets from the disparate locations like LinkedIn or Facebook, or searching the North America for the best conferences to go to that offer the best networking opportunities for us that we may or may not have thought about. So just that kind of skill sets, which I know someone can do. I just haven't gotten there yet to hire somebody for that yet.
Okay, I guess that's something we'll see in the future, and hopefully we'll be, be looking forward for your request for another VA once everything settles down and you've decided. And going back to your business, let's say if someone here is interested to be an investor, how do they reach out to you, and what do they need to prepare to be an investor in a commercial real estate?
Yeah, so we have a little presentation we can take people through. I can leave you my email address and contact information to reach out to me. I'd love to connect with anyone that's interested. Again, it's for accredited investors only, so there is a threshold for minimum income and or net worth, and we can talk about that a little bit more clearly too. And I would just encourage anyone to reach out to me by email, and I'm happy to connect with them. And I'd be happy to talk to anyone.
Do you have a website, just in case someone doesn't want to talk to anyone? We just like to see
an overview
of the company.
Yeah, it's. Do you want me to say it right now?
Yeah, and I'll type it out in the description box so they can just look it.
Oh, sure. It's www.investmidfield.com.
Okay, www.investmidfield.com. So we will be sure to put that in the description box. And I guess social media is also, they can also look up the company and you yourself in social media together.
Yeah, we've got Instagram, Facebook, Midfield Investments, and I have my personal one, Arlett Tygesen, where I give tips and tricks to young up and coming investors and how to be smart about your money, and it's just like mom advice. If someone wants to reach out to me and kind of get some 101 on mentoring and how to think about your future, right? So in terms of here's how to build generational wealth, and here are the things you should think about at this age, this age, this age. So so it's been an interesting journey on that side of things too.
And what better, who better to get an advice for someone who has like over $100 million worth of like investment from multiple people than yourself to get advice from. And that being said, you've already raised hundreds of millions of dollars for several years, I guess, in your career. So at some point, I'm pretty sure it's gotta be more than just earning more money. I mean, some part of it might be, but there has to be more to it than just making more money in your field of business. So what is it? What is it that's more than the money that keeps you going on what you're doing right now?
That's a really great question. I spent my career wishing I had a mentor or somebody who could kind of help me learn, because I didn't know what I didn't know. And I find so many people still don't know what they don't know. You don't know what the opportunities are in the world. You don't know anything about real estate funds. Everything is just in a box, in a bubble. It seems like somebody has the key to it, but it wasn't me. And so, after spending all these years in this space, I really enjoy teaching people what they should know about these things, or did you think about doing this? And it started with my daughter's college friends. They follow me on Instagram, and they were like, "Oh, I wish my mom told me these things," and I was blown away. So I literally just started a little Instagram in May of this year. I have 20,000 followers already, and I just provide some guidance. So it's just kind of like, don't do this, do this. You guys live in a social media world where there's a lot of influence that is not always the best or the most positive. And it's, you think you should be living this life and you're not really serving yourself. So it's just trying to take things back to basics and teach kids a little bit, not just kids, but teach anybody who wants to learn. Financial literacy is a really, really important thing, and it's not as complicated as people think it is. So it's really about giving ownership to your financial future and making sure that you think about things like your retirement, and that you actually have money for when you don't want to work anymore, or you don't have to work anymore. Because what we're seeing now is people have to work until their dying day, and that's a really sad reality, right? So it's just, I was motivated by earning money earlier in my career, absolutely, because that's what you do in your 20s and 30s and 40s, and now it's just, I love the idea of building a big business. I really enjoy that. I really enjoy the people I'm working with. And when you find those opportunities, it's just about building it's just about building something, and it's enjoying the process. And on the way, you're actually teaching a few people a few things, and bringing people along for the ride, and they're going to benefit from it in ways that they don't even realize. And hopefully, we're teaching people a few things, and they're making some money for their retirements, for their future, for their lifestyle. And one of the things that I really care about is teaching people how to create generational wealth, so that they're building it for themselves and they're building it for their kids.
I think that's absolutely wonderful, and I agree. Money comes and goes. When you have a lot of money, you can buy a new house, a new car, but let's say a few months or maybe a year or so, that excitement will go away, because it's just money. Once you got something, the excitement of having it slowly kind of dies away.
Yeah.
But if you're helping someone, the thanks that they're giving, and knowing that, oh, I was the one who introduced this person to investing in this, and now she has generations worth of money that's going to be good for several generations to come. I think that's the thing that makes you really happy for a longer period of time, knowing that you actually made an impact in a lot of people's lives.
Yes. And one of the key lessons I learned early on in my career is it doesn't take a whole lot. It just takes a little and discipline. So doing something like putting away $500 a month, for instance, as soon as you can, as young as you can, it chips away, and it just compounds. That's the magic of compound interest. And, thinking about your future when you're 20 doesn't seem that important, but it's actually the most important time to start thinking about these things. So, and it's just a little bit goes a long way. So just be consistent, and you can make money, and you can change the trajectory of your family.
The small things that actually makes a difference. So you can fall in a rabbit hole clicking at TikTok videos of random silly dances and trends, or you can follow Arlette here and have some information in Instagram about investments. Just you don't know what you don't know. That's the thing that we talked about earlier. So you'd be surprised on how much of a difference by watching a few clips and videos of actual positive influencers that will help you with managing your money. So Arlette, thank you so much for joining us in the podcast. And of course, before we end this, maybe you would like to promote or give a shout out to anyone?
Of my company, sorry.
Anyone that's connected to your company, it's also good, or within people you work with, it's all good.
Oh, sure. It's like, well, Midfield Investments, we're raising a fund right now. We're looking to raise a couple $1 million for this new asset that we have under contract right now. The deal's closing mid-October. So if you're interested, please reach out to me. It's Arlette at Midfield Investments. It's Arlette at investmidfield.com. And our website is midfieldinvestments.com. And if anyone has any questions, I'd be delighted to take you through and teach you a little bit about what we do.
Okay, so I guess that is it for episode for today. Hopefully, like me, you've learned a lot for today's episode. And yeah, it's an amazing episode, Arlette. And hopefully for the people that are watching this, we'll see you again in the next episode at the Sphere Rocket Podcast Network. Goodbye, everyone. Feeling overwhelmed by your business tasks? Well, it's time to step up your game. Visit www.sphererocketva.com and get a virtual assistant from us at Sphere Rocket VA. Streamline your business operations and focus on what really matters.